All right, how's it going, everyone? Sorry, OBS is acting weird. This is Anon. None of this is financial advice. This is for entertainment purposes only. All right, sorry about that. It said it was just waiting and waiting, and then I saw YouTube say it was up, and it didn't show me that. How's it going? What's up, Dirty? How are you, bud? You been killing it on the market, man? Just want to make sure you guys can hear and see me, right? This Xanax is for your sleeping pleasure. What's up, Random? How are you, bud? Do you want me to just do AMSR? How's it going? This is Anon. I'm here to put you to sleep. What's up, Earthium? How are you, bud? When moon, right? When moon. Probably zoom in a little bit. COVID. Bull market. Downtrend. Weird thing breaking out. Coming back down onto the downtrend. I'm hurting. Buying fast. Ugh. I was going to say, yeah, I was considering FAS a while back, and then I was like, they're going to get a bailout or something weird's going to happen. So Random just woke up, and I'm not going to be able to put him to sleep. Horse tranquilizer. Yeah, that usually does the trick, right? Yeah, so we're sitting here at the 395 area. We're in this down channel though, and it broke through here, but it popped back up, and we've been basically bouncing back and forth. There is still this this gap up here, and I'm wondering, do they go ahead and fill this one, but probably leave this one open, or are they really going to rip it, get up to the 420 area again, and then just absolutely crash it down? It's weird. That's the one it got moved. Where was this? Yeah, you know what? I can get rid of it now. We don't need it. That's already came and gone. Let's take a look. Is there any? Just curious. Just looking. Everything depends on the BPS and the bond market, which looks bad. Yeah. They need to slow down inflation. So, like, with inflation kind of being like in this weird spot where they need to curb inflation badly, right? So, like, Jay Powell and the Fed need to do that. However, yeah, I can get rid of this one too. These got all messed up when I changed around my settings. I have to remap out some stuff, but yeah. So I think at this point the Fed's going to probably do 25. I don't think they're going to pause. You know, and I still think that there are all these gaps down here that just make me super worried. That, like, with financial stuff, with potential like U.S. Russia / U.S. Chinese relations, it's just one of those things where it's like, do I need to move this? Yeah, I probably do. I think it needed to go up a little bit. Like here-ish. How's that work out? Still a little bit off there. Anyway, what seems crazy to fill a gap 2 years ago, that would be trillions on the SA. Yeah, I mean, so here's the issue, right? These ones, especially here, like I could see it getting down to at least the 280s again. I just, people are like, oh, that's impossible. No, it's not. Like if you look at like this, we went from 338 all the way down to 218. Like it's not impossible to lose that much, you know. And that was like the entire world economy shutting down. If we go back to like the weekly, I mean, you can see some significant sell-offs. Like here's '08 peak, right? Valley. That's a huge drop, right? COVID's nothing compared to like some of these major incidents, right? So I'm just saying, like, you know, you had a massive bull run, sell off, right? V shape, more like a W shape almost, and then it came back up here, hit basically the you know previous .com boom like numbers, and then tanked all the way down to what was that, like 60 something? Yeah, 66. And then had this massive, massive move up, right? Like this is a massive move. Like COVID was nothing. And now you're sitting here, you're going to have some of these gaps fill. Like that's just the honest truth. The question is just how they do it. Like so this is the weekly. You know, this thing's out of control, right? And so they're going to be basically tightening, right? So once they start tightening, it's going to contract the economy. It's going to basically, you know, I think there's more downside to this thing. So people can disagree with me. That's fine. Yeah, but I mean, you can see back in '08, like '08, if I go back to get off the daily and go to the weekly, I mean, that was a massive crash. The financial crisis, I mean, like the stock market lost a ton, right? So debt cap bounce, and then just free fall, right? I mean, you had a huge gap here. And look, you can see that gap. They ended up consolidating on that gap, right? So I'm just saying, like, I see something like this happening in the future at some point. You know, call me a bear, but this has been a really, really, really big run. And this was just the COVID flash crash. And then they injected all that money into the system. And now you're having to tighten, and it's going to go the other way. So, I mean, that's just my honest opinion on that. I think at this point right now, we're more likely to see, you know, a significant drop at some point to start filling some of these gaps down here. And I assume there's going to be a period of consolidation in like the 280s to 290s. That's kind of what my thought is. I posted a guy in Twitter. He said the same thing in the main chat. I need to catch up on Discord. I've been kind of off. I've been taking some classes. Okay. Let me take a look. All right, so let's take a look. Main chat. See what Dirty's talking about. Dirty posted. What's under the hood? She's going down, down, down. Yeah, I think most of us are kind of on the same page. Some of us aren't. That's fine. Like there could be a bull run, just like whenever you see like right before like a crash, like a significant downturn, there's always a significant bull run. So if you kind of remember back here, you had this is a daily. So you had 1, 2, 3, 4, like just gapping up like to hit that top. And this is where most of them were selling off. And then you had a significant period of down, pop up, came back up, and then we started this basically trend line. Oops, shoot. Shouldn't have done that. I moved it. Something like that. I'll have to see if that fits, but I keep grabbing the wrong things. I just can't fathom it going that low. It's like 15 years gone. Yeah. Well, I mean, like, conditions are not going to be good. That's just the truth of it. Like, financial conditions are going to be bad for a while. So, I mean, whenever they raise rates, I mean, if you go back to like the 70s, right? Like, let's take a look at like all right, so like let me go to it's not gonna work. Do they not track back that much? I look at Dow Chemical, aren't I? Oh, that's against leveraged. Hold on. I need to get more familiar with. Was it Dow Jones Industrial? Make sure I'm grabbing the right one. All right, that was the Great Recession right there, right? This was COVID. Right? No, that was 08. This was COVID. And then this is where we are now. But, like, I know, I'm seriously messing up. I haven't streamed in a while, so I'm just completely off my game. But yeah, like, this was the Great Depression. They went from, what was that, like 380 down to a low of 40. That's a huge, huge drop. So, anyway, what do you guys want to talk about? You want to talk about let's take a look at a couple things. So I just want to cover a couple ones that had earnings. Let me get off the monthly. So Solo Brands had earnings. It actually was pretty good, and that was their fourth straight beat. So they have nicely popped up, higher than. It didn't get as quite as high as the run in the summer, but I was going to say I had been averaging down, especially when it got down to the threes. I just felt like it was undervalued. So I've taken some profits on this one, and I will enter in back when this gap fills down here, like in the fours. But Jim, can you talk about the recent banks falling under? Sure. So I'll do the banks because that at least covers kind of like the broad market stuff. So here's the deal. You have the first bank that I remember really kind of noticing going under was SI, Silvergate Capital, right? So these guys here had a huge tie to crypto, right? So these guys were basically like the exchange broker for like crypto, and they had a bunch of like crypto people holding their holdings in there. and they absolutely just, and remember, the short interest was on them and people thought it was going to squeeze, but like if you actually looked at their like stuff, it was, they were in dire straits, and so they eventually just, I think they got delisted. So there's that. So Silvergate was the first one to fall, right? Then everyone started hearing about SVB, right? Which, oops, was it Silicon Valley Banks? Am I typing it wrong? SBV? No. Are they delisted? Is that why? Yeah, they might have. I think they got delisted. Right? They stopped trading them. SVB was the ticker, right? Yeah. So I think the reason why we can't find their ticker is because they got also delisted. So unless it's owned by something else. Is it? Let's see. SVB. Oh, SIV. Okay, sorry. SIVB. Okay. They're on a pause though, aren't they? Didn't they stop trading? Like here, they basically just like shut it down because it went like, yeah. All right. So what happened with these guys was they were having liquidity issues, right? And so they had made a bunch of really bad bets on bonds. They bought bonds when they were like super low. And then as the Fed started raising, these things were basically under, like, they're basically losing money on them. Because of that, they were trying to go around and raise capital. And basically, when they started trying to raise capital, a bunch of VCs in the Silicon Valley were like, hey, listen, this bank's in trouble. Like, if you got your money in there, you might want to pull it out. And so one guy, a big VC, tweeted it out, and that caused basically a run on the bank. And what ends up happening with the run on the bank is when a lot of depositors try to remove their money all at once, these banks always lend out. It's called fractional reserve banking. What they do is they take your money and they are allowed to loan out more money with the assurance that you have money in there. When all that money's pulled all at once, it basically breaks the system because fractional reserve banking allows basically these banks to lend out based off of the amount of like money that they're holding. So when everyone comes all at once to collect their money, there's not enough money, and so it breaks basically the system. So that's what happened with SVB, right? Then the next one was, what was it? Was it Providence? Providence, I think. Was it Providence? Is that right? You guys remind me. Providence State. Is that it? Feel free to correct me. I think it's called Provident. Bank run, maybe if I put in that, it will. Signature, sorry. I think there was a Provident Bank though that recently had financial troubles too. Maybe that was what I was listening to on Bloomberg when I was going home. But Signature Bank was the other one. So Signature was another bank that had ties to these other ones, and so the problem is like people are like, oh, it was just these like one-offs. Well, it's not. All these banks are tied into each other. So they basically went out and here's the bank. Thank you, Random. Appreciate it. So here are the ones that have gone down so far. And interestingly enough, I don't see SI on there, Silvergate. Maybe because they were a crypto bank, they don't count them as like an FDI share. I don't know. But was there a Provident Bank? Or maybe I'm just making that up. Signature, Silicon Valley. And these are just the ones so far, right? Yeah, I'm just taking a look. Washington Bank. Farmers and merchants. Interesting. Oh, these are just these two right now, right? If you look at the dates on them. First Republic. Okay, that was another one. Yeah, I mean, these banks are starting to start falling like dominoes. And so what they did was they basically opened up like this large fund for all these banks to basically pull liquidity so they don't go under. So with a bank, you should always know basically. I'm displaying 12. Okay. I'll put all. Oh, wow. Okay. Maybe we'll do this. Can we sort by... Wow. But these, I think these are just the ones that have recently gone down, right? They're in order by date. Yeah, this is the closing date right here. So that's March 10th, but they hadn't had one since basically 2020. So it'd been 3 years since, but there was COVID money, right? You would have thought there'd be more that went down because of COVID, but so anyway, essentially though, what's happened now is you've got these banks and they're starting to be, they're all intertwined. So like they've set up this big fund, like a liquidity pool for these banks to borrow. And like, I think they said they gave out like $180 billion in liquidity, which means that there were a lot more banks that were in trouble, or their banks just seeing free money and they, yeah. You said First Republic didn't fall. Where's First Republic? Yeah, some of them got saved recently by this liquidity pool that they opened up for them. So, I think the problem's bigger than what people realize. And the question is why? Because these banks are all supposed to have oversight. But back in 2018, basically, they repealed part of the Dodd-Frank, which was the Dodd-Frank Act, which was basically like the oversight over a lot of these banks, which caused the '08 crash. Because they were basically just being greedy and selfish and trying to make money instead of actually being responsible. There were a handful of banks that did it right and were being responsible during that time. Obviously, they weren't as profitable as a lot of the other ones, but yeah, they got $30 billion. Goat says they got $30 billion today from other banks straight deposit into their bank. Yeah, they're like literally like just infusing cash into these things, and they have a pool open now from like the Federal Reserve. They're basically bailing out the banks. They're saying it's from the American taxpayers are not going to pay, but I'm telling you right now, someone's got to pay, and it's not going to be big institutions. So in some way, they'll just raise fees, is my guess. So in the end, you're just paying an inadvertent tax. But yeah. So here's the issue, right? You've got all these different like banks who are all in trouble, and they all have needed this liquidity, especially the small to medium ones. And even some of the big guys, I'm sure, took some money. So will it stave off? I don't think so. I think all they're going to do is just try to like weasel their way out into another bailout, because this is how the system works. But in 2018, they repealed, they passed over some like basically like they were pulling back restrictions on small to medium banks. And essentially what ended up happening was when they did this, they basically lost a lot of oversight onto these small to medium banks, and they were going off and doing things that like they shouldn't have been doing. And so now I believe I heard Elizabeth Warren and somebody else were trying to basically put those back, but with the, I'm not big into politics, but I follow politics because it's important to the money. So from what I understand, they want to put the regulation back in tax so they can kind of get oversight back on these things. But at the same time, with right now the Republicans controlling the Senate, I don't think it will pass. So, yeah. I mean, and then you've got Credit Suisse. Yeah, you're right, Dirty. Credit Suisse got denied by the Saudi bank, but then they got money from the Swedish government. I mean, just it's getting to be like the warts are starting to show. Like, we've known for a while that this whole rally and this whole mess has gone, let's go back to the SPY. If I go just to the monthly, right, that kind of growth is not sustainable without pullbacks. Let's be completely honest. Like, you don't get growth like this. I mean, you had this couple hiccups here, right? But I mean, since basically '08, we've had this massive bull run. Like, there's going to be a pullback at some point. Just throwing it out there. Which is, I'm not saying go out and buy puts because that's not how the market works. But I am saying that in this case, there's a reason why I'm anticipating a large drop at some point. And I do think it's going to fill some of those levels, especially down here in the 280s. So right here. So there you go. Okay. So that's kind of the banking situation right now in a nutshell. I still think there's going to be, once those dominoes start falling, this cash liquidity will help them for a while, but the ones who are in trouble are going to remain in trouble because it's not like they're just going to be like, oh, well, now we know how to be responsible. It's not how these guys work. They're trying to make money, and they're willing to basically do whatever it takes to make money, which often is taking large risks, and we all know how that ends up turning out with history. Okay, so we wanted to look. I'll finish up with DTC. I'll jump around a little bit, but DTC, they had good earnings. I'm looking at this gap down here. Hopefully it fills, and then I can get more shares. But I did take a lot of profit already, just because it's like one of the few things that was actually up in the market. So the other one that I had earnings obviously was Ethereum. We've talked about that somewhat. I am putting out a DD on it, but at this point right now, we're still in this down channel. I don't foresee that changing anytime soon. We just haven't had a ton of, there's not anything like, oh my God, amazing news. Like, it's interesting hearing about them expanding to Europe, but that also would cost money. And at the same time, why is this column so big? Yeah, that's why. Let's change it to 2 and 2. Probably have to move that up a little bit. It's getting closer. Let's do. Can we do 2.5? Is that allowed? I don't see any difference. Let's try 3. Just want to see. Okay. Down a little bit. I don't know. I'll play around with it later. But anyway, I just, at this point right now, there's no big catalyst. This is when, this was what, second quarter? Or was this first? Hold on. This was fourth. So this was first quarter? Is that right? First, second, third should be... Yeah, so I think right around here, when's the last one? This one in August should be the one that they're possibly getting to positive EBITDA on. That's what they claim. So there you go. But at this point right now, I expect us to keep kind of like dropping until we find a support level. In the past, it was in the like 70s, just consolidated a little bit there before kind of going back up. I think slightly on paper, it's slightly better than it was. We still have better cash position than previously, but you've got to remember that this is the only thing right here that's the wild card, which is armistice can exercise their warrants after this date. So at some point, are they going to push it all the way down, make it maybe possibly a double bottom, and then maybe push it back up, make a run on it, unlock possibly the $2 warrants? That would also give Ethereum some more cash, and then they can sell out on those, and if they wanted to reshort them or whatever their game they're playing. But just a thought, that would be the warrant run. This is the wild card. We don't know, but at some point, I do expect Ethereum to run its. Will that happen in August over here? It could be. It could be that this thing kind of just chops and bleeds off for a while, and then eventually goes up again later this year. We'll find out. But yeah, it could be 18 more years till green. We don't know. Let's see. So that's Ethereum. The other one that I thought was really interesting was BBAI. I listened to that one. That one had the latest earnings, which was right here. I think that was on like Tuesday or Monday evening. So I listened to the earnings call, and they basically asked a bunch of really interesting questions. The people, like I think it was Oppenheimer and a couple other analysts. What I heard was, basically they said there's going to be more pain in the beginning half of this year, but later in the year, they should start getting money from that $900 million Air Force contract as long as everything goes according to plan, which is why they took the money to bridge kind of that gap. And guess who they gave it? Guess who lent it to them? Let's see. Who's got this? BBAI. Who lent them money in exchange for about 13.88 million shares and 13.88 million warrants? Who do you think would have done that deal? Dirty. Tell me. Armistice. Arthium's got it. Yep. Armistice lent BBAI. Nope, it was Armistice. So Armistice lent them basically some money to basically bridge the gap between when they got their because their cash burn was too high. So what I was looking at for them, I can pull them up here. So BBAI, right, needed some cash, right? And so they got cash from Armistice. Armistice then has these shares that they're probably bleeding off right now. They probably ran it up, right? If we look at the chart, Armistice ran it up, right? They gapped up, they got their shares, they pushed the stock price up, and this is probably Armistice selling, right? Selling, shorting, selling, shorting. And then what did they do, right? They get down here, and they can't exercise these things until July because they got them in January over here. So this is when Armistice got their stuff, right? And they also announced that they won the Air Force contract. Stock skyrockets up. Armistice gives them money. They push it up, and they sell off, right? What do? They sold off probably 13 million shares into the ether, right? They just making their money. They probably shorted it all to hell at the top, and then they've been just basically bleeding it off, right? So here's what I think is going to happen. I think this gap at some point is going to fill. So you have this large gap here from like 161 all the way down to 85 cents. I think they push this thing down, push it down. July, however, is when they can exercise those warrants. Those warrants are at $2.39. Is that right? $2.39. So what they will probably do is make another run up and see if they can get, I still think at this point right now, you're not going to see this stock really in this mid-range until probably later in the year. But it's something to keep an eye on because I do think that they have the right stuff going. They won a $900 million Air Force contract. They won like a $24 million Army one. They're dependent on government at this point right now, but government is growing their AI. Government wants AI to be like on the forefront of what they're investing in. So they said in the call that they think that AI eventually will be something like $800 billion spent on AI with the government. And if that's true, these guys are literally like just. Alex C., can you talk about something other than squeezes? $0. As a dividend stock, would you invest in IRA? I'm also confused on how dividend stocks work. What's a good percentage to price? Okay, so let's first off just talk about what a dividend is, right? So a dividend basically is something that is paid to the shareholder. So if you wanted to look at like a solid dividend stock, you would sit there and you would look at something like Coca-Cola or I'm trying to think of like there are ones that have higher dividends that pay out, like the percentage of a dividend. Basically, what a dividend is instead of just putting the money back into the company in R&D or whatever, they basically treat you as part owner, so you get a piece of that every single quarter. Now, some of them are yearly dividends, some of them are quarterly. A lot of the blue chips that are kind of been around for a long time, those ones are on, what are you asking for? Ticker zero? What's ticker zero? Let me look it up. Ticker zero. Realty. Okay, so let me take a look at this one. So, okay, ticker O. Is that what you're saying? Or is it a zero or is it an O? It's an O? Is this the one you're talking about? Realty Income Corp. This is the one you're talking about, right? Okay, so let's look at their dividend yield. See, someone's actually asking me about a dividend stock. Look at that. Wait, I, not zero. Okay, hold on. Are you talking about, so the ticker's name is I? It's O. Wait, which one? you wrote I a couple times. Okay, yeah, okay, zero, or not zero, but O. Okay, so this one. So this one right here has a quarterly dividend right here, right, of 76. So you get paid basically 76 cents each quarter per share, right? So you're essentially basically a shareholder that is part owner, and you're getting basically part of the income. And what they do is they decide how much they're going to set the dividend at, and then they pay out their people. So every shareholder, in this case, let's look up their stuff. So in this case, let's say, okay, shares outstanding. What's going on with my computer? Shares outstanding on ticker O. All right, so they're saying it's, what is it, 612 million? Does that sound right? Let's see if we can pull it up on here. They don't even show you shares outstanding. Okay. Make sure I got this right, though. The total shares outstanding as of last quarter were, yeah. So if it's less than, if it was 1, it would be 1 billion. So this would be 612 million. So each one of these 612 million people will be getting 76 cents per share. So say you have, for example, let me pull up my calculator. You have 0.76, and say you have 200 shares of the stock, right? You would be getting basically a dividend for that quarter for $152, right? And then if they keep that dividend across the entire year, you times it by 4, you would be receiving a yearly dividend of about $608. You do have to pay gains taxes on that though. They tax dividends, so just to let you guys know. But you do have to, yeah, Earthium's right. You do have to hold before the X date, or else you don't get the dividend. If you sell prior to the X date, you're not receiving the dividend. As a dividend stock, would you invest in an IRA? Yeah. So what your dividends basically do is they just grow over time. So, for example, that's 600 and whatever dollars that we were just talking about, right, Alec? Here, let me pull up the calculator again, right? So what we did was we said it was 76 cents. I think in the example we said 200 shares, 152 times 4. The 608 after taxes, let's just say you pay, I don't know, they take out 92 out of that. I don't know if it's that high. I'm just throwing out some numbers. So you would take your 608 minus 92. So you would basically get $516 that would be going to you, or you can do what's called dividend reimbursement, which basically means that you reinvest that into buying more shares of that stock. So I was going to say, in this case, this dividend would pay out every single year. You would buy, if you had DRIP going, dividend reinvestment program, you would basically reinvest it into that same stock, and that would slowly grow over time. And so, but each company decides on how much they're going to pay out. In this case, they decided that they're going to pay out this much of the yield from the yearly, and that's what makes up the 76 cents. So this right here is just a percentage of how much they pay out, right? And then this is the actual physical number that you get paid. So does that explain things pretty well? Or, I mean, dividend stocks are great. Like I've got plenty of blue chips myself. You know, ExxonMobil, they have paid a nice dividend for a long time. Let's see. And you can actually track. Yeah, ExxonMobil's was 91 cents in this case, right? So if you had 500 shares of it, you're making some good money off their dividends, right? And they paid that out. And you can actually find, like, there are dividend, like, charts that you can find. Let's try high dividend stocks. Now, not all these are like great investments. They just pay out good dividends. But it doesn't necessarily mean that they're going to continue doing it that high. Some of them have slowed down. But yeah, Coca-Cola is a great one. It's just, and that's one of the things like Warren Buffett, if you want to go into like some of these, in particular, like, let me see. Verizon paid out a decent dividend. I don't know these guys, but this one that paid out 13%, right? Which was an annual dividend of $27. This one said it was 6%, but it was also an annual of 3%. Dow Chemicals, IBM paid out a pretty decent dividend. So you have to just figure out what's good for you. If you pick staples, like people are always going to need phones, right? So AT&T, Verizon, those particular big companies that have just been around for a long time and have a lot of like cash generated on hand, that's something you have to keep an eye on. I mean, even, if you want to buy a tobacco company, they pay out a decent dividend. But in the end, what you need to figure out for yourself is something that's going to be around for a long time if you're going to invest in dividends. So you want to find things that literally, are staples that we'll always need. I'll be adding those ETFs. Yeah, and some like ETFs pay out dividends. A lot of your retirement stuff does. So just, I'm glad you brought it up, Alex, because a lot of people never ask me about this stuff. They always just want to know about squeeze stocks, and so, they just assume that's all I know. And I'm like, no, I've been investing for a long time. It just, people, that's how they knew me. So I do want to work on my knowledge on bonds because bonds are so important. Like I know like the kind of like basics of it. And I know like an inverted yield curve is not good, but those bond players are really, really smart. Now, granted, they had a bad year last year, but like bonds indicate so much. Anon knows about options. Does he know about QL? Let me look it up. Yeah, I don't know everything. Q 100 covered call ETF. I imagine they're doing pretty good. Year to date, they're doing well. Overall, though, is it one of those decaying though? Yeah, it looks like it's one of the decaying ones. So if you look at their max, you play this at certain times. You don't buy and hold this forever because if you look, they're down 32% over their, what was that, 2014? Do they have a dividend though? They've got a dividend yield of about $2.12 per share last year. It's paid every month though. Okay. Interesting. Yeah, long term, I don't know if this is the right thing, but certain periods, they also carry hefty fees. So you're better off doing that. What does it say? Anon, look at them dividend. Look at the dividend payment for them. Oh, okay, yeah, they pay monthly, but at the same time, it's not a long term buy and hold to me. It's something you would play during certain parts, especially when they're writing covered calls, and then basically the whole ETF is just a bunch of covered calls. They're going to generate cash, but overall, they're not like. I think you guys saw the chart. It's not like. It's kind of like more sideways, right? And then overall, in the last couple months, it's been down. So, Anon James Anon. All right, so let's go back up and find out what ones you guys wanted to talk about. We talked about BBBY, but I think long term that's an interesting stock to, there is that gap down there. I think long term they're going to be fine. In the short term, I think it's going to be hairy. So this is a stock to kind of watch that gap down at 85 cents. I think they've got enough money to last into the second half of the year or the back half of this year, which basically will give them enough to basically get that 900 million contracts rolling in, and then there'll be probably positive cash flow. But there you go. Let's see. What other ones did you guys want to talk about? The banking. For anyone asking, Quick was talking about FAS. FAS is basically I think it's 3x leverage. Is that right? Yeah, 3x leverage bear financial. So when the financial sector is crashing, this goes up. So as you see, the bank stuff started and it's gone up. Now, banks started getting bailouts, it's going to go down. But this is one of those that's like feast or famine. You look back and you see, okay, during COVID, it went from 189. Now, this is remember, it's a 3x leverage. So it moves hugely up and down, and every single day it has theta decay, which means that your stock is going to go down. This is a very short-term buy and hold. This is like okay, I think the world's going to end. The banks are all going to shut down. This is when you buy this one, just like UVXY and those things like that. But you can see 189 to a top of 600. So you know, that's a huge jump. Let's see. The other times it kind of spiked were, can we go back to 08? Let's show you 08. No, it kind of stemmed, I guess, out of 08. They made this thing back then, but that's why it was that high back then. You see like mini spikes here and there whenever they think there's bank problems. This thing will jump hugely and then usually come down. It's not something you get greedy on. You take your rips and you go. You know, COVID, the most recent bank failures. I would imagine there was probably a spike during the war when it kicked off. Wasn't it like March or February? I think it was March or April of last year. Yeah, you can see there was some uncertainty. So that's what FAS is. 3x bear leverage against financials. So if financials crash, this goes up. But don't play with it, honestly. Like, I'm not giving you financial advice, but I don't play with the stock unless I think things are going to, like, the world's going to end. Same thing with UVXY, but UVXY watches the M1 and M2 futures. So that's another one you got to kind of like watch out for. You don't hold this one either. Like, you play a rip and then you go. This was the COVID thing. Everyone thought the world was going to end. Huge rip and then just drop like a rock. Don't hold these things. Short time frames if you're going to do that. Let's see what other ones you guys want to talk about. Scrolling down. Anon and the Hendersons. Things are getting hairy. Oh, poor TRKA. Okay. I will briefly cover this. The CEO, he's not back right now, is he? He never came back. Just delete whatever this was. All right. So, TRKA had a day where it moved up, but I mean, this stock has millions more than it did initially, right? So if we go to TRKA, they now have like a float of like 330 million, right? So if you figure this out, they're going to have to reverse split. They've already gotten, I think, an extension. They haven't been. I'm not counting the days, but when was the last time they were over $1? They closed over $1. So they were out of compliance basically this entire time. Did they have 10 days over $1? So no. 1, 2, 3, 4. Nope. 1, 2, 3, 4, 5. Nope. 1. Nope. 2. Nope. Nope. So basically, since May of last year, right, 2022, and so they have 180 days, and then they can file for another 180 days. So most likely what's going to end up happening with this is they're going to have to do a reverse split, right? Because you have 180 days, you can file for another extension of 100 days. That gives you basically a year, right? So in May, they're going to have to do a reverse split or they're going to delist. That's what's going to happen. So there you go. SGIM is the inverse Kramer. That's right, Random. You bought a share today. I like those Slim Jims. Habanero flavor, spicy. Tra-la-la-la-la. You guys are crazy. All right, but yeah, TRKA's basically screwed. They're gonna basically do a reverse split, and that means all your stuff they'll probably do like, I don't know, 10-1 at least, if not higher, to try to get back down. They may have a little pop, but I mean, most people bought like up here in this range, right? That's where retail FOMO'd in, and then they basically announced that they had that massive dilution, and now you're screwed. So. You think TRKA gets bought out? It's possible, but they might buy it out at like 60 cents a share or 50 cents a share or something like that. TRKA to $40, right, donkey? BTI. Okay, let me take a look. BTI, British American Tobacco Industries. Okay, just looking at this from just throwing in a couple things. And that kind of lines up with earnings. So I think if you were going to be kind of like just like it's basically doing this. So you have a culmination coming up right here at earnings, which is on July 27th. So this thing is going to probably stay within these like two like channels unless things absolutely break down on the market. It did kind of push down here. This is just like TA, not looking at any fundamentals on the company. But essentially, Alex, like you're looking at this thing kind of coming into this range right here. I mean, I could probably firm up these triangles a little better to fall right on earnings, but this thing's basically going to earnings. It's going to be probably around the $30-something range, 37-ish. I would say it's in between 37 and like 38. That's going to be roughly the range it will be in July, would be my guess, unless it absolutely breaks down. There is a gap down here at 32, right? That needs to fill. So if I was going to see this, it's either going to break down, you're going to fill this gap here at 32, and then you've got a lot to the upside. So it all depends on how they play this thing, but I mean, just eyeballing it, that's kind of where I see. That's a symmetrical triangle. Meh. I don't know. You guys tell me what you see. We can open up for discussion. I mean, we can look up the financials if you want. Hold on. They're foreign, aren't they? I don't like the foreign ones. Oh, look, they make a bunch of vapes and other such things. This is very bad. It's hard to read there. So they've got flavored and heating products and all sorts of things. All right, so number of non-combustible product consumers, they're growing, I guess. Do they have a balance sheet on this thing? All right, so they're international. We've audited the company group balance sheet. Here we go. All right. The foreign ones are always like, ugh. All right. I'm just not used to them. All right. So revenue has, they slowly have gone up. Let's see. Raw materials used also went up. Employee benefit costs has gone up. So that went up significantly. So they're spending money on their employees. Depreciation, profit from operations has gone up a little bit. Earnings per share. You guys hear that? So I don't know if you guys heard, but we got a cat. Yeah. So I got called out to one of my job sites, and they told me that they found this cat, and yeah, my wife's always wanted a cat, and I was like, they were gonna bring it to a shelter, and I'm like, I think it was a kill shelter, and I was like, I texted a picture of the cat to my wife, and I was like, I don't know how this is gonna go. I'm just gonna throw this cat in my car and see what happens. So we brought her home, and she's actually a nice cat. I think she must have been around humans before because it's, but we basically, yeah. I've never owned a cat before in my life. I've always been a dog guy. We have a dog here too, so we had to see if they got along, and they have been getting along. But yeah, the cat will come up to me. What's its name? Luna. It's a girl. Her name is Luna, and we have a dog named Charlie. The cat's name is Splat. Splat the cat. Someone's got kids. All right. So profit for the year actually looks like went down. Interesting. So the profit went down. They must be paying more in expenses. Must be giving out all that money to their employees. That's why stocks go up when they're cutting costs, and you should get another cat or dog and name it a Tyrion. I think I'd be upset with the Tyrion most of the time then. Oh, Tyrion's my love-hate. They just need to turn it around. I mean, I do think they will at some point. They've survived this long. There's still people willing to give them money, but, if I had to hear about resplitting and all these other things one more time, it's like, oh. They just need to get to that back half, get positive EBITDA, and they'll be okay. But, I mean, overall, I mean, they look like they're in fine shape. I don't see, I mean, let's see what their cash position is. Where's your cash? Cash flow is down a little bit. Cash equivalents, they still have cash. So I'm not worried about this company at all. I mean, they've got a market cap of $85 billion. I think they're probably doing fine. Get a male dog and a female cat. Name the dog ATER. Cat freak. ATER freak. Oh, boy. So, yeah, I mean, for this stock, if I was going to be trying to basically go long on them because they're a big company, I would be looking down here at $32 as an entry point. Maybe 33 would be safer, basically to fill this gap. And then at that point, like if it breaks down during this time and it breaks to the downside, I would expect it to bounce somewhere in this range. And then it does look like it has a good amount of like upside gaps to fill. So as long as they're not doing anything absolutely stupid, I could see this thing, their estimated revenue is $16 billion. So this is a big company. I've never seen a wedge break up. Yeah. So for me, though, I would be looking at like this. If a wedge breaks down and it comes into this range, fills the 32, 97, I would be looking at that as a pretty probably fair entry point. And then I would just hold it for a while and just see what happens. Even if it goes down even further, they're fine. They've got plenty of cash. They'll make it through. They're a big company. This is not something like, if you look at their history, most of their stuff was in this range. They've had some, down years and chopping around a lot right now. But if this thing was to get into this range, this would probably be a good place to go because there's a lot of people holding bags probably in the 60s. So at some point, somebody will pump them up in the next bull market, and I would expect it to basically, I know people are smoking less, but at the same time, you're talking about the entire world. So, yeah, I feel good about that. Was there any other tickers you guys wanted to do? I know. Yeah, Earthium, I think BBAI's right now book value is negative according to their like last kind of like thing. It wasn't like a fully audited balance sheet, but just glancing at it, it looked like they had negative. But I think that will change in the back half of this year, which is why I'm kind of just watching them and slowly dollar cost averaging down. I think the biggest thing for them is going to be basically in that 85 cents range. If it fills that, that's where I'll go probably the largest, and then just hold because I think AI will grow, and especially in the government space. And I do think they're positioned well for that. They've got a young female CEO from IBM who sounded really intelligent and kind of sounds like they know what they're doing. She also shut down, I believe, like a bunch of regional offices they had, and they're really just consolidating down to, it sounded like Chantilly, Virginia, and Columbia, Maryland. So they're right around D.C. They're going to be in it to basically lobby and try to get those contracts, and I think they're a good long-term investment. But I wouldn't jump in head first right now. I would probably watch that gap down at 85 cents. All right. I feel good. You guys good? Everyone's doing well? I made some money on the market, kind of trying to go against common sense. Everyone was getting super bearish. I was like, yeah, I'm going to buy calls. And then as it's gone up, I'm just starting to slowly buy September puts on the SPY. So that's kind of my like strategy right now. And then I'm just averaging down on stocks that are, just beat up. Like GameStop right now is getting pretty beat up. If you notice, it's coming down to this lower VWAP level right here. And I do think that at some point we will see a bounce. You can kind of see here, it got pushed down here, got pushed down again, double bottomed, and then it's now kind of consolidating down. Earnings came out here, dropped down, came back up, dropped down. If you look at this pattern here, if it happens again, it kind of does this often. It has these large spikes, and this probably has something to do with swaps as well. We're looking into that. Hey, there's Fish. Fish will probably tell you more about GME. But it just seems like they have these random things where they come down and they'll usually double bottom or triple bottom and then they'll spike. So, yeah. The next bull market's in 20 years. Storms are gone, but the tornadoes warnings. Oh, yeah. Wait, Random, you're in the UK, right? Is AMC dead? Mm. Oh, you're in Texas? Okay, cool. You did that thing with the dollar sign being like after, so I thought you might be like British. Wait, UK gamers. He's British. That's right. Okay. All right. Here's the deal with AMC. So AMC basically, Adam Aaron screwed the apes. He basically used them as his piggy bank, paid himself bonuses, paid the board bonuses. They just stuff that you almost can't believe they did. Like this was a stock that was really, and they still have huge debt problems. But they basically asked AMC shareholders to give them the tools to dilute. AMC shareholders told them no. So he basically issued out APE, and since then the stock has just been falling because what essentially happened was APE is the preferred share that they're going to basically convert over to AMC shares eventually, but there'll be like 900 million of them. And what will end up happening is APE will go up in value to meet AMC, and eventually they'll merge together and they'll create this giant mess. And then they'll do a resplit, and most people will lose money even more, and they'll just keep whacking retail until retail finally turns on them and just says, screw these guys. And then the shorts win. That's one scenario. Or they become relevant again because they've basically whacked retail enough to pay off most of their debt that was out of control. And, they'll just kind of chop around because some people do like going to the movies, even though right now it's been kind of like a dying industry, just because you can watch, stuff at home and not spend $40-$50 on that experience. But some people like it, so I don't know. Like, I think there's a place for it. I don't think the business model is what it was, but basically since like streaming came out, they've taken a huge hit, and so they have to find other ways to make money. And if they can't do that, then they will probably fail as a company. I don't know. I told people long ago I've been anti AMC for a long time. Basically, I think that if AMC wasn't ever around, there would have been so much more pressure on GME, and GME would have done a lot better. But people bought AMC thinking it was like the light version of GME, and they were going to get this massive squeeze, except for there's a huge difference between what the board of AMC was doing versus the board of GME. GME got rid of all the rats. GME cleaned up the board, and the board were people that wanted to turn the company around, really believed in the mission, and Ryan Cohen basically put his money where his mouth was and bought in on the company and became chairman of the board. And I do think he's got a better sense of what's going on than Adam Aaron that board. Adam and Aaron that board, I believe, are a bunch of like hedge fund buddies who have a lot of ties to these different funds that were shorting them, and they gave them basically, an out on the squeezes. Like, this is a stock that should have probably squeezed to the moon, and instead he sold off massive amounts of shares directly to his buddies at discounted prices instead of letting it actually run. They could have issued an ATM and just actually, made a ton of money at the top, but they just started selling off right in the middle. He killed the squeezes before they ever happened. So I don't like him as a CEO. I think that if somebody else was running that company, they would have taken a lot better, advantage of when to do things and not be so chummy with Wall Street. And it annoys me because I do think GME would have been a lot faster had there not been basically people like Trey Trades pushing that. And I shouldn't just blame Trey. Trey, I think, was doing the best with the knowledge he had. I mean, I give him credit. He was, military, But it's the same reason why I joke that I'm a crayon eater, is because we don't know what we don't know. And I think Trey eventually learned that basically APRN was using him, which is why he basically just disappeared. Matt Kors, same thing. Like, all these guys got famous on YouTube for basically pumping something that shouldn't have been pumped, and they backed the wrong horse. And now they're all sitting there going, oh, well, yeah, we knew this was going to... No, you guys were in on this from the beginning, and you backed the wrong horse. Like, that's what ended up happening. So, here's the ticker and on BBBY. Oh, you're a jerk. You're a jerk, Random. Anyone doesn't know, I put out a DD on Reddit like, I don't know, like a month ago or more. And I tried to explain to the poor people at BBBY what was happening. I said, listen, you guys don't understand what's going on. You think you do, but you don't. And I explained how convertibles worked, and I gave them examples of MULN and BBBIG, and they called me a shill and told me that I was corporate, stooge, just basically putting out FUD so that I was trying to get them to sell. I don't care if they sell. But, who got in behind the wrong horse? I mean, we've all gotten into some bad horses in our short time together. Had we not gotten greedy, we could have made a ton of money. But the exchange reported SI for BBBY. What is it now? I think the last time I looked, it was like 87 million or something like that. Let's check it. But here's the thing. So this is the problem with Ortex and what everyone's thinking. They have the listed shares outstanding at 116 million, right? That's not actually what the shares outstanding actually are. My guess would be the shares outstanding is at least 216 million, if not more. So they announced dilution. All they had to do was get the Form 424B5 form signed, and then at that point they were allowed to start diluting. It happened on, was it this day? February 6th. Yep. So on this day, they signed that agreement, right? The stock pumped up, and then they announced after hours that they were going to basically dilute. Boom. Since it closed at 586, since that day when they signed that dilution, what's going on? What's going on? It just keeps going down, right? Hit a low of 1. So they hit 101. They're hitting all-time lows. And the reason why is because they're diluting on them. There's not 1.3 billion, but there's definitely way more than 116 million. Now, here's the problem, right? So retail is sitting there going, oh, well, look, there's 82 million shares shorted. That's 72% of the float. No, it's not. Right? It's not. Ortex is funny because they only hire people with masters and PhDs, but they can't get their data right. Yeah. So, like, I'll give you a perfect example, right? So these guys have, so Hudson Bay, I talked to Dilution Tractor. They were like, listen, Hudson is probably the one behind this. So they used it as a placeholder because they were mentioned in a bunch of Wall Street Journal articles and Bloomberg articles. And they ended up being the ones. Everyone's like, oh, you don't know what you're talking about. I'm telling you, I told you guys this a month ago. You didn't believe me, and now you're sitting there and you're looking at these numbers thinking that you're 87% or 76% short, and in all actuality, you're more like 40% short. And they're like, oh, well, then the reason why this thing's going to squeeze is because reg show. Well, we've learned very, 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 very from a ton of experience, reg show means absolutely nothing. And in this case, the reason why they're still on reg show is actually because, dun 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 dun, Shorts are literally just being like, they're diluting, so we'll be able to pick up these shares later. So they're like literally over shorting. They're like tripping over themselves to keep shorting it because they know that they're going to continue diluting. So they're failing to deliver the things, not because they can't find them, but just because they're trying to over short stuff and they're not finding locates. So they go 13 days, they cover in these short little spurts, and then they reshort. Yeah, we learned from ATER after being on Reg Show for like, I don't know, like 40 days that it doesn't mean anything because it's not like 13 days is over, boom, everyone has to close. It's per out of compliance member has 13 days, and that's the key. So somebody can be out of compliance and then come into compliance on day 13. The next person can be out of compliance on day 13, but then they have another 13 days to themselves. So this thing can go on for a long time. We know this because Overstock.com was on the securities threshold list for 666 straight days, which is crazy. They were on it for over like 2 years. It's crazy. So these guys were all thinking this thing's going to squeeze to the moon. Look at this, 76% of the whole thing's short. We're all buying shares at like $1. We're going to squeeze this to the moon. We're DRSing our shares. Yeah. You know what's ended up happening? The shorts are having to pay a bunch, but they don't care because they're making money on it. Right? And so eventually BBBY will get one last shot for people to get out. And that's only if they probably have averaged down at this point, like majorly. If you had like a $20 average up here, you're screwed. Like you're not going to get that money back ever. If you've been averaging down, you have an average in like the 2s or 3s. There's a shot that when they stop diluting and these shorts decide to take some profit and they close their short positions, there will be a big green spike. And then at that point, they will go. But FTDs don't matter because they're diluting. So any FTD that's happening, they're just going to locate it later down the line after 13 days. Like, so BBBY, if people had any common sense, they would have listened back then and not just been calling me a shill. Like, I literally went out trying to find this information for them. I wrote up a whole DD on it, and like I ended up getting like 85% downvotes. And I'm like, I told you guys. What happens to your puts if BBBY goes OCT? Your options will be cashed in. That's a good question. We'd probably have to check with the Chicago board to check what happens on it. If they go over the counter, I would imagine they get that weird status. You would probably just have to sell beforehand. But yeah, I mean, I feel bad. Like, I put out 2 YouTube videos explaining this dilution to BBBY, and they still didn't listen. So, I'm just hoping at some point, they will come around and want to learn how all this works. Because there's going to be they have like 77, or it was like maybe it was 57,000 people in that sub. I'm sure half of them are bots, but either way, there's still probably like 20, 30,000 retail traders who don't get how this works, and they're going to get hurt. And like, I don't like watching retail get hurt. Like, if we can share this information, that's the whole point why we do this. So even though I know we have a very small crew that comes in here all the time, I appreciate you guys hanging out and talking about stocks, and we'll try to keep things going. I do remember I told you guys we were kind of working on a bot. I'm going to try to work this weekend with L on the Discord. I gave him some admin rights to be able to work on some code, and we're going to try to get something going. He already put something up. It can talk to you a little bit, but we're still kind of working on how all that's going to work out and what kind of commands we're going to be able to send it. But eventually what I'd like to do is be able to basically pull out a, like, if you put in, like, give me all the information on the stock, it will just, like, literally spit out, like, PDFs and charts and, all that stuff at you, and you'll be able to kind of get it. Not quite like a chat GPT, but I just wanted to make it, like, kind of like, all right, so how should I put it? So, like, for example, if you were to type in, if we go to trading bots, right? I'd love to be able to give it a chart here. I'd love to be able to give it, like, shares outstanding, float, in another, like, thing underneath it. So if you said, I want, like, all the information for the stock, it gives you everything in one spot that you can kind of easily condense. That's kind of like what my goal is. I want to be able to see that. I want to be able to say, tell me, give me the rundown. And then it shows you short interest. It shows you, cash. It shows you, like, all the things that should matter when you're starting to look at a stock. I wanted to be able to kind of do it on the fly and kind of also compare dilution, throw out some landmines if it has warrants. Like, that's kind of like where I want this thing to go. See what the options chains look like. So you to say, like, give me all this information, and it just spits out all the stuff at you. That would be awesome, because then if you wanted to see if there was major changes, it would all be right there. Yeah, but I think we're gonna have to probably work with Open Bloomberg and some other, like, data scraping that's, like, available. I think if we started doing some fundraising at some point, if we actually started getting this thing off the ground, we could probably raise a little bit of money to actually, like, pay for, I think it's called, like, a API. And at that point, like, if we pulled some, like, actual raw data from some of these, like, paid companies, we could get pretty accurate information, and then, like, import it into some sort of, like, database, and then we would pull from our own database. But that's kind of like the long-term goal. I'd love to see that start coming to fruition, but, we'll see how it goes. But yeah, I think it'd be good. I think, something like that would be worth having, for this group. Make better decisions. Just, like, I want to see how many landmines we can, like, avoid by just having a tool like that. Earthium says, I know how to do that, but man, am I too lazy for that. Yeah. I mean, El's a college kid, and he's, I think he's studying, like science, or, like, astronomy or something like that, but he likes data. So, like, if he's willing to work with me on that, we'll try to figure it out, and maybe we'll figure out a way of compensating him in some ways. But I told him, I was like, if you are willing to work with me on the programming side, I'm willing to teach you anything you want to know about stocks. And if I don't know it, I'll learn it for you, and I'll teach you. So, but at this point, I'll probably try to learn a little bit of Python, or at least enough to be dangerous and screw everything up. But, I will at least try to put in some effort on it. But we're going to be millionaires, Anon. That's the goal, right? Got to have a couple million to retire on. So I think there's plenty of smart people that are coming into the group and kind of, like, contributing, and I'm hoping that they learn, they grow, they become better than me, and we can continue, like, just bouncing ideas off each other, and negative millionaires. We're gonna owe millions to Wall Street by the end of this. Just debt like BBBY, debt like AMC. That's the kind of negative millionaire or billions that we're looking for, right? I mean, I'm a multi-hundredaire. How do you monetize that? I mean, I guess we could do, like, paid members go in there. I mean, any mod will just have free access, but like we will just have like, you know, we could put up like just a private channel where only people that are paid members can use it, and like we won't charge a lot. It would just be, you know, something most retail could afford. And then if it's a good tool, then it'll be worth it for a lot of people. But if it's not, then, you know, obviously no one will pay for it. So that's the idea behind it. At this point right now, you know, we should make a company and do an IPO. I mean, if we actually created some tool that was actually decent enough to have other people want to use it, then yeah, that'd be cool. But if we raised up enough money, just go out and buy Ethereum and then run it a different way, right? We'll just issue out. We'll do share buybacks when we shouldn't do it, just to mess with shorts, and we'll buy back all those shares that they diluted. Yeah, I mean, like $120 a year. That's not like killing anyone. All shares reinvested into ATER or set on fire, or both. A $1 dividend for no reason when the share price is 90 cents. Just absolutely mess with Wall Street. Sorry, that just makes me giggle thinking about like just what these people would be what they're doing. What they're doing a share buyback when they have no cash. Yeah, why not? Resplit ATER for no reason. Yeah, I mean, people pay hundreds of dollars a month. I mean, I'm paying hundreds of dollars a month for all these tools, and they're crappy. And to be honest with you, look at this overview of BBBY. They don't even have the shares outstanding right. Now, granted, I know they're only going off the filings, but like dilution tracker, if you type in BBBY, look, they're at least including it. That's a much more accurate than this. Because all these people are getting fooled because Ortex is not like keeping track of all this stuff. Granted, I know they're probably covering more stocks, but at the same time, it's like your information is not right. Yeah, random. I know you and I have talked about like the visual like things, and like that would be cool to see. I don't know at this point right now like how to do that. I don't have the knowledge on how to like program stuff like that out. But maybe as we grow, we'll find, you know, that we get more people. Is the warrant data registered with the SEC? Yeah, Eartham. You can find all the warrant information. It's just a pain. That's why I like Dilution Tracker. They put it in all in one place. They like literally bracketed out like all the warrants, all the convertibles, all the ATMs, the debt, the shelf. That's why I really like Dilution Tracker. We do have a discount code if anyone's interested in this. I think it's in the Discord under, I think it's, how do we call it? Yeah, it's here. You just have to put in Retail Collective at the end of it, and it gives you 10% off. But anyway, yeah, if you look, I mean, they're just, yeah, and they even broke it out. Like second tranche of 135 million converted today, meaning that the first 260 million of the tranche is already converted. So estimated shares issued was 100 million plus. That would give you 216 million, and they're still doing it. So, but yeah, I'm paying for Ortex, Fintel, Morningstar. There's like a bunch of them that I'm paying for. And it's like, Elle and I are going to offer jobs to all the Discord, and I could be the front desk. I'll be a very good front desk person. I will just sit there and answer phones. You sit in your corner, Anon. All right. I'm going to head out, guys. You guys are great. Thanks for hanging out, talking stocks. You guys take it easy. I'll talk to you tomorrow. There's a bunch of stocks I'm kind of keeping my eye on, and now you're buying cat food and kitty litter. My wife already put in Pretty Kitty, I guess. I don't know anything about this stuff, but like she ordered stuff from Pretty Kitty or something like that, and now I'm like, 150K a year. You better be a good desk. All right, have a good night, guys. If I can find the off button, here we go.